What's going on, everyone? My name's Obi and welcome back to Courtside Financial. Last night we live streamed NIO's earnings call, so thank you for everybody that showed up or signed into that. If you missed it, you can still catch the replay on YouTube, but today I'm going to be talking about a few gems that I picked out from it. So if you're new to the channel, make sure you hit the subscribe button so you don't miss out on any videos, and also make sure you hit the like button because it really does go a long way in helping out the channel. Lastly, if you want to be a part of the conversation before it happens here on YouTube, click the link in the description to join the free Courtside Financial Discord. When you open up your new brokerage account, you'll receive one free stock valued anywhere from $2.50 to $250. And when you make that initial deposit of $100 or more, you'll receive another free stock, and this free stock will be valued anywhere from $8 to $1,600. Lastly, cryptocurrency is now available on WeBull, so you can trade cryptocurrency on the platform with zero commission. So today we're going to be talking about NIO. It's currently 6:20 p.m. Eastern Time here in Michigan, and the stock is trading at $43.77. It is down 13% for the day, and it's up 1.06% in the after hours. So we saw a huge drop in NIO today. I took the opportunity to add to my position. I added in a different account, so my intentions for this account is really just a swing, but I could end up holding these shares long term. So whether it goes down or up in the short term, it's going to be a win-win for me. The way I see it is, okay, I can make some quick profit here, or I'll make more profit over the long term because of this move. If NIO pans out the way that I see it panning out. So a few gems I thought I'd talk about today from the earnings call. Number one, let's talk about the February delivery numbers, since I typically do monthly updates on deliveries, but this February delivery update was given in the earnings report actually. In February, NIO saw a steep decline in vehicle deliveries of around 22.8%. So that put them at 5,578 vehicles delivered in February, which isn't too big of a concern, as automotive typically does tend to slow down in Q1 since it's a cyclical business. As we remember, in January they delivered 7,225 vehicles, and I would imagine that a lot of those deliveries came from orders that were made towards the end of Q4, since that's obviously the best quarter for automotive. So during the earnings call, as far as vehicle production capacity, we learned that NIO does have the capacity to produce 10,000 vehicles per month when running a double shift. For the end of the year, their annual production capacity target is 150,000 vehicles annually, and then after that they're looking to move forward and run a double shift to get that to around 300,000 vehicles sometime in the future. So there were rumors floating around about NIO potentially releasing a mass market vehicle. CEO William Lee pretty much shut that down. He said that the NIO brand is a premium brand. There's a lot of room in that market for NIO to grow. So if we were going to see a mass market vehicle from NIO, it wouldn't happen under the NIO brand. They've been experimenting with brands like GAC NIO, which is a joint venture that they have with GAC. That was actually my prediction as well when I heard the rumors that NIO was going to potentially be releasing a mass market vehicle. I said it would probably happen under the GAC NIO brand. So if you haven't seen any of my videos on GAC NIO, I recommend you go check them out. They're still on the channel and they're still very relevant in my opinion. Edison Yu, my favorite analyst for NIO, the Deutsche Bank analyst, actually also asked some really good questions regarding US expansion, European expansion, and things of that such. William Lee said that as far as US expansion, that was always in the plans. They just have to be patient and be strategic. My prediction there was that US expansion wouldn't be happening this year. It wouldn't be happening next year. I was actually looking to see that happen maybe the end of 2023, 2024. But William Lee pretty much said that Europe is going to be the next stop, which a lot of us already knew. As far as an update on that, this is what they said. All operations for Europe are pretty much ready to go. The team is set up and the sales and service network as well. We're also seeing some NIO houses pop up around Europe, so that should be happening this year. Now that we're on the topic of NIO houses, let's talk about the elephant in the room. Because a lot of people were saying that as an investor, they want to see that their dollars are going towards stuff that is going to make the company more profitable. But when it comes to the NIO houses, they address that as well. Pretty much the NIO houses, the value that the NIO houses provide are the value that you don't see. The NIO houses are a big piece of their brand in shaping that lifestyle aspect of it. On top of that, the NIO houses lead to sales conversion, and they also give NIO more of a brand presence. NIO offers these clubhouses known as NIO Homes as pretty much a lifestyle piece to get potential customers and NIO users more acclimated with the product and the company. You can think of NIO Homes as a NIO user's home away from home for themselves and for their family. With NIO being a higher end car brand, NIO Homes are typically in affluent and high traffic areas. This is a good thing because if you're going to have these houses, you want to have them in areas where people are going to see it, and then it's also important to make sure that you have these houses around your target customers. So like I said, affluent areas. As I mentioned, there's a camp of people who aren't really a fan of the NIO houses because they think that they're too costly. Well, they actually also mentioned that they decreased the cost of the NIO houses by 40%. So I actually see them as an integral part of their business. So another thing I want to talk about is actually something that I think is going to be pretty huge for NIO, and I think that it'll boost their margins tremendously. So last year I was reading an analyst commentary on the topic of XPeng versus NIO, and this analyst in particular, I can't remember who it was, they decided to go with XPeng because they said that XPeng is kind of copying Tesla in a sense. They're building out their own autonomous driving software, and as we know, software is very scalable. It's a high margin business, but that was why they ended up going with XPeng over NIO. As far as software, it doesn't cost a company much to sell one more unit. For example, if you think about Tesla and full self-driving, if you were to buy a Tesla right now, you could actually buy full self-driving. Doesn't mean that you would be able to use it, but there was a time when full self-driving package with your Tesla that costed around $6,000. Last time I checked, it was around $8,000. So Tesla can sell their software at scale and increase the price, which obviously is bringing the company tremendous marginal benefit. One thing interesting to me in this NIO earnings call is that they said NOP actually helped out with increasing margins as well. For those of you who don't know, it's a newer NIO update, Navigate on Pilot, where you could take your NIO on the freeway and pretty much drive autonomously.
就快进入领航辅助路段啦！
这个地方它那个
我们要汇入主路了，请注意路况。2公里后右下匝道了。结束领航，路线交给你了。
领航辅助让驾驶。
Now we're talking about ADAS, which will basically bring the same marginal benefit as full self-driving, which, by the way, as I mentioned, full self-driving is not ready yet, but people get in early so that they pay less because, like I mentioned, Tesla is increasing the cost of full self-driving. ADAS is autonomous driving as a service, and I think it'll be huge for NIO. On a less positive note, NIO faces some short-term headwinds as far as chip shortages and battery material shortages, which they did warn investors last night was going to be a risk to the business. Chip supply constraints right now are a problem for the whole industry, and of course NIO is no exception to that. They should have enough for Q1, and in Q2 they also said that they should have enough, but who knows what happens in Q2. But as a result of the shortages, they're only going to be able to produce 7,500 cars per month at max, and the materials required to produce the batteries should bounce back and supply sometime in Q2 as well. So anyways, those were a few gems that I took away from the earnings call aside from the numbers and everything. I want to know what you guys took away from the earnings call. What were your thoughts? What are your thoughts on NIO today? Make sure you hit the like button, leave me a comment down below, hit the subscribe button. I'll link the free Discord in the description, and as always, thank you guys for watching. I'll catch you guys in the next one.